Wonderful good day, ladies and gentlemen. It's out of our studios today here in Munich, Commodity TV, and we are happy that we have here Bill Howald from RipeHedge, the president, CEO, and co-founder of the company, to give us a little update. What's going on with that?
Hi, Johan. How you doing? Good to see you.
I'm fine. Good to see you. Great, as always. Well, RipeHedge, you had some movements in the last months. I think particularly of interest is, I think on February you started really to go, or to start the process to go into production, right?
Yeah, that's right. In February, we put out our annual budget for the year. We're really going to focus on our Lincoln Hill project, where we're driving towards production there. We've got a metallurgical program that's starting here in April. And then we'll be doing some infill drilling through the year with the idea of having a feasibility done over the next 18 months. So start of 2016, we should be ready to do our feasibility.
Fantastic. You have already pre-assessment, or pre-economic assessment study. Can you comment a little bit on the numbers there, on the IRR and several gold and silver prices maybe?
Sure. Well, we did a preliminary economic assessment back in July of 2014. The numbers that came back were very robust. We're very excited by what we see. What we envision right now is a real simple heap leach run-of-mine operation, very typical of what you see in Nevada. There's a lot of upside built into the model in that we did our PEA at $775 gold. So at current prices, we see a really nice internal rate of return of around 50%, net present value in the $50 million range. But as we see with some of the work we're doing towards the feasibility, there's some real upside in the fact that if we can get, right now as a run-of-mine operation, we're using 64% recovery for gold. If we can get something similar to what our neighbors get at Rochester, which is around 92, it has a significant impact on the economics of the project.
I believe that. Gee, that would be an upgrade like nearly 50% of the recovery rate.
Exactly.
But where do you think could be something to bring up the recovery rate? Is it, let's say, something like you have to crush different, or you leach different, or you take it longer on the pads? Is there... Because I think you're testing that now, right?
That's right. So that's what this initial metallurgical program will look at, and that is the size versus recovery. So, like I said, we believe for a little more in capital, right now the project is about a $30 million project. Maybe for another $5 million, we can increase that recovery from 64% as a run-of-mine operation to plus 90% as a crushed.
Well, that's only for $5 million.
Yes,
I think so. That's a good investment.
That's the really big upside for it. So I mean, there's a lot of things that can add to the project. We also have a couple of exploration targets nearby within a kilometer of Lincoln Hill. So, at Lincoln Hill we have a resource with roughly 600,000 ounces of measured and indicated, and 400,000 ounces of inferred. Nearby we have Independence Hill, which could add maybe another 500,000 ounces. And then to the west we have Gold Ridge, which again could add additional ounces to the resource.
That sounds to me like that this already may enlarge the mine life in the future.
That's correct. I mean, it'll be a trade-off between mine life and production, right?
Yeah, exactly.
Right now the production's envisioned at about 30,000 ounces of gold and a little, about 750,000 ounces of silver. So, we could either double that with some increases in the resource or add to the mine life.
Yeah, but it's still, if I do rough mathematics, that's easily then, even if you go larger, like a 10, 15-year mine life possible.
It's possible.
Yeah,
sure.
Super, fantastic. Money. Let's talk about money, because that's important, because you have a little bit of a special status, I would call it, because you have a royalty from a land swap, I would call it also, with Kerr Mining, and you get something like $1 million around the quarter. Is that correct?
Yeah, so we receive US $1 million per quarter at the current prices. Obviously, if gold and silver price go up, we can generate more cash out of that royalty. If you use $25 silver, the royalty basically doubles. We would get about $2 million per quarter.
Wow, that's fantastic. And I presume even with the $1 million per quarter, that's enough to finance all the stuff you're doing,
We're fully financed through our feasibility. We feel the feasibility study is going to be roughly $6 to $8 million. We have cash in the bank, roughly $7 million in the bank.
And you're not touching that cash, right?
We're just either adding to it or just leaving it there. But all of our efforts are funded through what I'll call pre-production cash flow from the royalty, and so we try to spend roughly $3.5 to $4 million per year.
Yeah.
And
fantastic.
Yeah. So.
And then the good thing is you still get some interest in the US for your cash. We have negative interest.
Yeah, we don't have much interest at all.
That's right. At least you get some.
Exactly.
Great. So that sounds to me that you are fully, let's call it fully funded until you do the, let's say, until the bankable feasibility. And when you make the production decision, you require some project financing, some forward deal, whatever.
That's right. We'll have part of the cash, but we won't have the entire $30 million or $35 million to build the mine. So we'll need to do some kind of financing at that time. Okay. But it could be as simple as a debt financing, right?
Exactly. Yeah, and also with your economic numbers, I presume that's really not an issue. Yeah. Shortly, let's touch on exploration, because you had a press release out that you are starting now a 5,000 meter program. Right. Please elaborate shortly on that.
Sure. So, in addition to Lincoln Hill, we have this cash flow from the royalty. We're leveraging those low-risk dollars into more low-risk dollars by trying to push Lincoln Hill into production. But we also have some tremendous upside potential along the Cortez trend. And so here, there are no resources. It's a grassroots type exploration, but the prize that we're after is quite large. So it's kind of a risk-reward type situation. We spend a few high-risk dollars in that area, but the reward could be quite big.
Exactly, yeah. And yes, you are in the Cortez trend, right? And hopefully the trend is your friend.
The trend is your friend, no doubt. It is an interesting gold trend in that just since 1991, which is a very short time ago, there's been over 50 million ounces of gold discovered, mined, and processed. And so it's really probably the next Carlin trend in Nevada.
Fantastic. That sounds terrific. Bill, thank you very much for that. All the best. And we look forward to get some more news from you. And also hopefully, one thing I forgot, sorry, that's what I wanted to ask about the permitting. Because I saw in your presentation, that just comes to my mind, I saw in the presentation that it's a process like 30 months. Is that correct? Can you speed this up?
No, we can't. It's roughly 36 months. It's a process that you have to go through. We need 12 months of baseline data, and then we need 24 months to secure the permit. Yeah. So, as much more money doesn't make it go faster. Yeah. It's simply a process that we have to go through. What we're doing now is we're running that permitting process in concert with our feasibility study. So the idea is at the end we'll have everything come together, and then we'll be able to make a construction decision.
Super. Great. So it's the law, and you are following the law, of course.
That's right.
So that's a process.
That's right.
Great. Thank you very much.
Okay.
We will hear hopefully soon more that you follow the process and everything is in good shape.
Okay.
Great.
Thank you.
Bill, thank you. Ladies and gentlemen, that was Bill Howald, the president and CEO of Ripatch. Well, you heard it. They started the process to go into production. It's, a thing which is a defined law. It's a defined process which they have to go through. And the good thing is they have the money to do it. And they only need, of course, some money to bring it finally in production, to bring up the plant and the mine. So everything is in good shape, and check out the company. Thanks and bye-bye from Munich.